120 countries. I'm Nancy Lyons.
All right. Thank you so much, Nancy. I'm Carol Masser. Joining me right now is Charlie Pellet. Charlie, I just want to reiterate a headline. Robinhood said to have filed confidentially for a U.S. IPO and initial public offering, according to those in the know, moving ahead with their listing, and they are said to be selecting the NASDAQ as the venue for that listing, according to people familiar with the matter. But listen, this is, the trading app that became immensely popular during the virus pandemic, and we found a lot of people at home using it, and then, of course, got caught up into the meme stock trading frenzy and all of that going on. But nonetheless, they're moving ahead.
And that brings us to GameStop, because that certainly is one of the stocks that has been traded on Robinhood markets. Still awaiting those numbers to be released, but I'm on the lookout for GameStop. If and when we get it, I'm going to interrupt whatever we're talking about and get it on the radio as quickly as possible.
All right, heads up, you're right. It should be crossing any moment. In the meantime, among the most read stories, how now for something very different. Prince Harry is taking on a new job, and that is Chief Impact Officer at BetterUp.
Indeed, and Chief Impact Officer, relatively rare in the corporate world, but a couple of companies, Salesforce have it, titles more common in the nonprofit realm at organizations such as Amnesty International and United Way, and should point out that this story comes to us from Dow Jones.
Right, and BetterUp, it's a fast-growing coaching and mental health firm, and the company putting out those plans today. What's interesting, this is something that during the pandemic, I just did a discussion with a CEO earlier today. It's part of an event tomorrow that's being put on by the Bloomberg Live team, and it's all about mental health and the economy specifically. But we know that it wasn't just about your physical well-being during the pandemic. That was obviously important, Charlie, but also our mental well-being.
And I'm just thinking, there you are in the office, and who's your cubicle mate? Prince Harry. I mean,
I know.
Just another day at the office.
Kind of cool, right?
Indeed it is, although I somehow doubt he'll be sitting in the cubicle along with the rest of us.
All right, this is among our most read on the Bloomberg terminal. And again, we're waiting for those earnings out from GameStop. We'll bring them to you as soon as they cross the Bloomberg. This is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, still awaiting the latest numbers out of GameStop. Shares today did decline by 6.5%. We did learn earlier today that GameStop CFO is out, but again, just waiting for those headlines, the earnings to clear on the Bloomberg Professional Service from GameStop. We did hear from Adobe, and Adobe has boosted its adjusted earnings per share forecast for the full year. That guidance beat the average analyst estimate. Adobe shares little changed after ours, sees adjusted EPS for the full year at $11.85. Earlier had seen about $11.20, the estimate $11.25. So Adobe shares trading little changed after ours. We have got the Dow, the S&P, NASDAQ all declining today. Oil tumbled. Let's begin there with West Texas Intermediate crude plunging 6.5%, down $4.02 a barrel, 57.54. Concerns about the pandemic and oil use in Europe and indeed around the world. 10-year yield 1.62%. Stocks lower. S&P down 30, a drop of 0.8%. We had the Dow Jones Industrial Average down 308, lower by 0.9%. Nasdaq down 149, down 1.1%. Nasdaq 100 index down 0.5%. Gold down 0.6%. 17.27 the ounce. Again, recapping, awaiting GameStop's numbers. S&P down 30, a drop of about 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Appreciate the update there. And Charlie and all of us have been watching shares of Microsoft today because that was certainly one of the companies on our mind. Stock was up about 2.2% at its highs, finishing the day, though, just with about a 0.2% gain. Story that was on the Bloomberg about Microsoft in talks to acquire Discord. That's a video game chat community for more than $10 billion, according to those familiar with the matter. Let's get into this and find out what we need to know and whether or not this is a good fit. Joining us right now is Anurag Rana. He is Senior Analyst of Software and IT Services at Bloomberg Intelligence, and he's with us on the phone in Chicago. Anurag, good to have you here. Tell us about this. Does this make sense?
Yeah, it does make sense, Carol. So if you look at it from the point of view of Microsoft, they are trying to expand the ecosystem of gaming. So what that means is you not only just want cool game technology, but you want a user experience around it, similar to a platform experience that you get, whether you're on Facebook, Instagram, or WhatsApp. So for Microsoft, buying this particular application, which is used a lot by gamers very religiously, is solidifying the view of that platform that I was just talking about.
Well, and listen, so it sounds like they've been for a while trying to tap into some different communities or communities of users, especially those that are off and running, right? They were trying to buy social media app TikTok last year. They held talks to buy Pinterest. I mean, this has been kind of on their radar for a while. Do something like this.
I think all three of them had different reasons, at least in our view. So, for example, the TikTok mode had to do with, for their ability to host their, cloud operations, so it can give them some benefit of, hosting a brand new, I would say, cloud native, company such as TikTok. The second one, Pinterest was, we think, a lot to do with image searches that would help their search business. And the third one is, kind of augments to their very, very successful and growing Xbox Game Pass or the online business. Now, so I think something that also goes back to their cloud business in the long run. We think down the road, gaming will no longer be done on either PCs or consoles, but would be done on the cloud. And, for that, it's better to have an entire ecosystem of users, of games. That's why they bought studios, recently. That's why they bought, Minecraft a few years ago. So they're buying a lot of assets that solidifies their, their stronghold in gaming.
Yeah, well, you just asked GameStop about, buying games in the cloud versus elsewhere. Well, what's interesting too, though, anything interesting? Well, I guess what I want to ask you is there anything interesting about the timing on this, and what do you make of the price if indeed this gets done and it's at $10 billion?
I think for Microsoft, I mean, a few billion here or a few billion here, there does not matter as much. It's just a question of assets like these do not come to the market. Several years ago when I think Facebook paid, I don't even remember, what, $20 billion or on for WhatsApp, people said, well, why are you paying this much money for a company that doesn't even generate any sizable revenue? It's a question of creating, as I said, the ecosystem. For Microsoft, if they want to be a serious player in gaming, I think this one kind of is a very prized asset. In fact, we had our gaming analyst in Asia, he's the one who covers all of these, he was very bullish on this thing. And, he wrote something with us last night. And I got a bunch of comments from people who are gamers saying, oh, my God, this is such an amazing deal for Microsoft. And for somebody who's not a gamer, it didn't make a lot of sense otherwise. But when you talk to people in the gaming community, this is a very prized asset.
Right. Are you talking about Matt Canterman?
Yes, Matt.
Yeah, who's like everything and anything gaming, like just knows this world so much. I agree. I think when I first read it, I'm like trying to make sense in terms of how it fits into their strategy. But you think it makes sense. Is it something that will move the needle when it comes to either the top or the bottom line ultimately?
See, once again, it's if you are not a part of an ecosystem, and if you are able to get more content, more studios, then you could be the predominant gaming platform in the world, similar to Windows for computers, or for that matter, Azure for cloud computing. So it's very important for Microsoft to stay ahead of the game rather than play catch up, and don't let Sony, who has been a big deal in the console area, but Microsoft is creating really a lot of noise when it comes to online gaming. I think this is where the future is for this particular industry.
Hey, just one last quick question. As our reporting says, no deal is imminent. Discord may opt to go public instead. If so, would you consider it a big miss, or they can move on, Microsoft that is, move on and find something else?
I think Microsoft will. I mean, if I go by what Matt explained to me about this company, it would be a big miss. But even if it goes public, that does not mean it's it could just mean it could be down the road someday.
Good point.
Either they do a partnership or buy it. But for Microsoft's perspective, it seems that whenever they get an opportunity to expand in gaming, they are not shy in pressing the button and making acquisitions.
Right.
So I think they're taking this business very seriously.
All right. Well, good to check in with you. Really appreciate it. Anurag, stay well. Anurag Rana, Senior Software and IT Services Analyst at Bloomberg Intelligence, on the phone in Chicago. And again, as I said, Microsoft just ending the day up a little bit higher. And you can read the entire story by Ardina Bass and Katie Roof. You can find that at Bloomberg.com. Coming up, a really interesting guest. We're going to talk about really the investment strategies of those top investment leaders. We'll get to that in just a moment.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So he's had a long and esteemed career investing, and now he's talking to other investors. He's got a book out about how the world's elite money managers lead and invest. We're going to get to Ted Seides. He will be with us in just a moment to talk about his new book. In the meantime, watching shares of GameStop, Charlie Pellet, they're up about 7.5% in the after hours.
They are surging after hours. GameStop naming Jenna Owens as its new chief operating officer. Fourth quarter adjusted EPS, $1.34 estimates there, $1.43. However, as you correctly pointed out, Carol Messer, GameStop shares surging after hours right now. GME on the ticker up now by 8.92%. Also out with earnings after the bell today. Adobe earnings coming in better than expected, or at least raising the full year forecast. Adobe shares up now by 0.5%. Sources tell Bloomberg Robinhood Markets, that's the popular trading app, has filed confidentially for an IPO with the SEC. A down day on Wall Street today. The Dow, the S&P, and NASDAQ all tumbling, losses intensifying as the session moved on. But today we saw the S&P 500 index down 30 points, a drop of about 0.8%. The Dow Jones Industrial Average down 308, down 0.9%. NASDAQ lower today by 149 points. NASDAQ down 1.1%. The NASDAQ 100 index lower by 0.5%. Russell 2000 dropped 3.6% today. Dow Transport's down by 1.9%. Well, as for the overall market backdrop, Ann Maletti is senior portfolio manager at Wells Capital Management, and she was interviewed this morning on Bloomberg Television and Radio.
There are inefficiencies in the market, and whenever you have this much stimulus thrown into the market, you're going to see things happen like we're seeing today. But what's really driven the market over the last decade is all of this stimulus. It's almost like everyone can survive because capital is so cheap. That trend has to stop at some point, and that's when fundamentals really will matter.
10-year yield 1.62%. Gold down 0.6%, 17.27 the ounce. West Texas Intermediate crude. Big story today, plunging 6.5%, 57.54. A lot of concern about energy demand in the U.S., Europe, and India. Again, we saw WTI dropping by 6.5%. Facebook facing a criminal complaint in France from a press freedom group that accuses the social network of illegally allowing the spread of disinformation and hate speech on its platform. Facebook shares lower today by 1%. Again, recapping, GameStop shares surging after hours, up now by 8.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We are up to date. Let's get to our next guest, because he began his career, I should say, at the Yale University Investments Officer under the famed and iconic David Swensen, later co-founded a multi-billion-dollar alternative investment firm. Joining us is Ted Seides. He's founder and managing partner of Capital Allocators, author of a new book entitled Capital Allocators, How the World's Elite Money Managers Lead and Invest. And he joins us on the phone in Greenwich, Connecticut. Ted, nice to have you here on Bloomberg.
Oh, thanks so much for having me, Carol.
Well, listen, and you're also host of the Capital Allocators podcast. You talk to some of the world's top professional investors. Before we get into the conversations you've had in the book, how are you? What's the past year been like for you?
You know, it's hard to say given what's happened, but honestly, it's been one of the best years of my life.
Why?
Well, it's a combination of things. On the professional side, the podcast, as it turns out, right, this medium can grow and continue in an environment like this.
Mm-hmm.
So I've been able to focus. It's been easier to get access to some of the people that I get a chance to talk to because their travel schedules are down. And the engagement with the content we've been putting out has just grown. It grew over 100% last year in terms of downloads. So that's been great. On the personal side, I got married last year. So met the love of my life, and things have been great.
Congratulations. Wow. Like hitting it out of the park. That is incredible. You know, it's funny that you say that about access to people, because I think that's something we realized too, that everybody, once you realized it was kind of okay to talk, everybody was home and in the same situation. And you're right, we had like access to people too that we hadn't before. So it's interesting that was your experience as well. Let's talk about your book and capital allocators, because I do think we're in an interesting time where we're watching a lot of investment trends. We're watching the SPAC explosion, the Reddit revolution. We're watching crypto, Bitcoin values continuing to grow and actually go more mainstream. How do you see it? What are some of the things that you find interesting? What's worrisome? What screams opportunity to you?
Sure. Well, you know, the people that I talk to regularly in the world I came from are really these asset owners, these long duration, long-term pools of capital. And not a lot changes in the way they go about investing day to day or week to week. So there are always a few key trends that come into play and come in and out of their idea generation. But for the most part, what they're finding is that, generally speaking, capital markets look expensive. Mm-hmm. And they all have spending obligations they need to meet, call it, 5% for a foundation or a little bit more for a pension fund. So they're really scratching their heads and saying, how are we going to meet these long-term objectives, given that the easy ways of accessing, say, index funds or things like that just don't look like they're priced to reach these long-term return objectives.
Okay, so then having said that, when you look at some of the more maybe, other areas to go, whether it's crypto, I mean, you like crypto, correct? The crypto area.
I do. I like it for a particular reason, which is we are in this world of fiat money debasement. And all of the risk assets, whether you like stocks or bonds or venture capital or private equity, they're all sort of predicated on dollar-based instruments. And so crypto is this kind of asymmetric option for the potential of digital gold and Bitcoin in particular. So you have a combination of the thought of something that may be very important 10 years from now in terms of just maintaining your store of value. And then you have attached to that sort of the venture capital thesis, which is if you look at where all the talent is going of these young people coming out of school, all these engineers, something like 20 or 25% of them, and this according to Chris Dixon at Andreessen Horowitz, who I had on the show, he said something like 20 or 25% of them, they're all going to build blockchain technologies. And when all the talent, that's what Silicon Valley does. When the talent moves in a certain direction, they go and look to access it. And so you put those two things together, and yeah, I have a small percentage of my personal portfolio invested in crypto. In particular, I'm taking baby steps. So for me, it's just Bitcoin and Ethereum at this point in time.
Listen, we have to do a little bit of news, but I want to come back and finish, and continue our conversation. Talk a little bit more, too, about some of the conversations you've had and if there's some common threads among some of these top money managers in terms of their strategies and what you're seeing and some of the conversations that stood out for you. And we'll talk a little bit more about the book. We're going to get back to Ted Seides. He's founder and managing partner of Capital Allocators. The new book, it is called Capital Allocators, How the World's Elite Money Managers Lead and Invest. And we'll continue in just a moment. In the meantime, back to World and National News, over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. Police have identified a 21-year-old, Ahmad Alissa, as the suspect in the killing of 10 people at a Boulder, Colorado supermarket yesterday. Governor Jared Polis spoke at a news conference earlier today.
My heart aches today, and I think all of ours does, as Coloradans, as Americans, for this senseless tragedy.
Polis says they will hold, quote, the evildoer responsible. Authorities say the victims were men and women between the ages of 20 and 65. President Biden is urging Congress to take action quickly to curb the wave of gun violence that's resulted in 2 mass shootings in a week.
The Senate should immediately pass, let me say it again, the United States Senate, I hope some are listening, should immediately pass the 2 House-passed bills that close loopholes in the background check system.
Biden also offered his condolences to the families of the Boulder victims. Michael Bloomberg, the founder and majority owner of Bloomberg LP, the parent of Bloomberg Radio, is a donor to groups that support gun control, including Everytown for Gun Safety. Postmaster General Louis DeJoy is unveiling a 10-year plan, which is a large rollback of mail services from the U.S. Postal Service and will likely require raising fees.
Our plan delivers a modernized postal service capable of providing world-class service service reliability at affordable prices and erases our $160 billion loss over the next 10 years.
DeJoy calls his plan delivering for America. Democrats say the only way to right the ship is to bring in new leadership and a realistic plan that serves all Americans. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. I'm Carol Masser in our Interactive Brokers studio, and there's a column by our Bloomberg Opinion, one of our Bloomberg Opinion columnists, Mark Gilbert, that caught my attention, and I want to bring it into the discussion with Ted Seides, who we'll get back to in just a moment. Charlie Pellet's joining me right now. And Charlie, this opinion column gets into all of the money that's flowing into securities deemed compatible with the ESG, environmental, social, and governance standards. And what's interesting is this column, again, it's an opinion column, he writes about how the risk of asset managers disingenuously, promoting their offerings as being ESG compliant is high and rising. And so basically he references a former chief investment officer at BlackRock, involved in sustainable investing at BlackRock, huge, the world's biggest asset manager, and something he said specifically.
Indeed, and a quote from that article for USA Today, quote, "In truth, sustainable investing boils down to little more than, quote, marketing hype, PR spin, and disingenuous promises from the investment community. Existing mutual funds are cynically rebranded as green with no discernible change to the fund itself or its underlying strategies, simply for the sake of appearances and marketing purposes."
Again, this is Tariq Fancy, former chief investment officer for sustainable investing at BlackRock, writing in that article for USA Today. And what Mark Gilbert of Bloomberg Opinion writes is that the numbers back him up. According to data compiled by Morningstar, more than 250 existing European funds changed their investment objectives to adopt an ESG stance last year, with almost all of them rebranding to reflect the purported change. He says, color me skeptical, with ESG funds piling in almost $120 billion of new money in the fourth quarter, which Morningstar reckons was 45% of total fund inflows. The temptation is to stick an ESG badge on all funds is proving irresistible.
Indeed, except for Europe, where they have introduced the Sustainable Finance Disclosure Regulation. That is a suite of rules aimed at policing just how the fund management industry deals with the climate emergency.
Yeah, listen, this gets into what people say is a lot of greenwashing going on. Anyway, an opinion column and just interesting.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, keeping an eye on GameStop shares, now higher by 2.2% after hours. GameStop, the roller coaster stock championed by Reddit-based traders, has appointed technology veteran Jenna Owens as its new chief operating officer, bolstering the shares in late trading after the ailing video game retailer missed analyst estimates for the fourth quarter. Shares, though, up now by just about 3%. The Dow, the S&P, NASDAQ all trading lower today, with the S&P 500 index tumbling 0.8%. We did see the Dow Jones Industrial Average down 308 points, down 0.9%, while the NASDAQ Composite Index lower today by 149 points, a drop there of 1.1%. NASDAQ 100 Index down 0.5%. Crude, a major story today. West Texas Intermediate certainly weighing on the markets. Oil companies lower. WTI plunging 6.8%, 57.33 a barrel. A lot of concern about demand in Europe and Asia and the United States. Global demand because of the coronavirus pandemic. 10-year yield 1.62%. Gold down 0.7%, 17.26 the ounce. So a down day on Wall Street, recapping S&P lower by 30, a drop of 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Want to get right back to Ted Seides. He's founder and managing partner of Capital Allocators. His new book, entitled Capital Allocators, How the World's Elite Money Managers Lead and Invest. He's also host of the Capital Allocators podcast, where he talks with some of the world's top professional investors, still with us on the phone in Greenwich, Connecticut. Hey, Ted, one thing I want to ask you, and we just did a story, Charlie and I, for some of our audience, and it's about ESG, and it's an opinion column here at Bloomberg, but it's just, there is a feeling that because there's so much money flowing into the ESG space, it's where investors, a lot of institutional investors are increasingly looking to commit new money, that a lot of, investment houses or fund offerings are just kind of slapping an ESG label on it. What do you think about? I know you like the ESG space and that you are following it. How do you, how do we make it purer and more true?
Yeah, well, I think you have to start with that perspective. If you look backwards, as this sort of research study showed, there will be a lot of that. And the reason is, as one of my guests, James Aitken, had said, there's a tsunami of capital coming into this space for all the right reasons. And so really starting with Greta Thunberg a year and a half ago, her description of what was happening, Davos just before COVID, every description was about climate change. We know that this is really important, and it will be a very strong secular change in how capital gets allocated worldwide. Now, as soon as money starts flowing, it's not that surprising that people trying to capture their share of it will do, what you call greenwashing. But let's not be too short-term about that. If you look over time, the first thing is we now have interest. We have interest in doing things that are better for the environment. We have interest in promoting more socially diverse people throughout the economy, all of which is good for the long term. Now, as that happens, we need definitions. We need to understand in the capital markets and public markets. We need benchmarks. And if you look at the different benchmarks, nobody really knows yet what is a good company, what is a bad company. And that will get worked out, but it does take time. And in that process, I'm not that surprised that you have products that want to say they have an ESG lens for the first time, and maybe they do and maybe they don't. But over time, I think we'll see the stronger companies that have those trends and doing the right things for a broader constituency than just the shareholder will be the winners over time. And that will play out as capital markets do. Until then, there'll be a little bit of a mess along the way.
Okay, but ultimately, the long game is that we get to a better point.
Yeah, I think so.
Hey, listen, your book, your podcast, your approach, there's a lot of useful information, informative. It's really on how the best invest. It's very instructional. I think you even in maybe the forward, you call it a textbook. You talk with the best. Are there common threads among the best capital allocators and elite money managers on how they lead and how they invest?
There really are. And you could really break it down into two sets of disciplines. One are the investment related, and the other are the leadership related. So if you start with the latter, the investment industry is known for managing money well, not for managing people well. And one of the things I've had the benefit of doing on the podcast is interview people from other disciplines who are talented at leadership and management and things like decision making. Annie Duke, the great former poker player. And so the great CIOs are really like baseball's 5-tool players. They really understand all of these different disciplines. And what I try to do in that section of the book is describe some of the basics, like how do you do this well? Then you turn to the investment side, and I was very fortunate to learn in the formative part of my career from David Swenson, who is sort of the dean of this and wrote the seminal book 20 years ago. And it does start with really an understanding of what's the purpose of the capital, what is the time horizon, what beliefs about investing do people bring in, and then a disciplined process that I walk through in the book of how do these people find their investment ideas, how do they do their research, how do they make decisions, and then how do they monitor and manage their portfolio, manage risk over time.
Is there something to, like, do all of them admit that they've made some really big mistakes and that was kind of a big learning opportunity?
Not all of them, but only the good ones.
Okay. You mean admit that they made a mistake?
Yeah, the investment business in some ways is very humbling. Morgan Housel, who recently wrote the book Psychology of Money, has this great analogy that he says, you could be trained at the greatest academic institution, work for the best place on Wall Street, and still underperform someone who knows nothing. If you were a brain surgeon, that would never, ever happen. So yeah, the great investors are only right 55 to 60% of the time in the public market. So yeah, it's a very humbling business, and it's important for people to learn from their mistakes.
How do you hope people use this book?
I wrote this book in large part because it was what I wanted to distill from my own investing and the investing that I do. And what I hope is that people see it as incremental ways that they can get better. And that's what the podcast has been, this just phenomenal way of sharing in public with some of these great investors, how they go about doing what they do. And every single one of them has a little nugget of wisdom along the way, which in fact is the whole third section of the book, is just a series of quotes that are some of the very best quotes about how these people think about it.
The nuggets of wisdom, right?
Nuggets of wisdom. And how they think about life, too.
Well, listen, I'm not going to ask you to say your favorite conversation. That wouldn't be fair, because I as somebody who talks to a lot of people, when people ask me that question, I'm like, I like everybody. I mean, it's just it's fun to kind of go back and forth. But do you have some that stand out for you?
It's hard. I do have 200 children, and probably 190 of them have been outstanding students.
Or any surprises? Yeah, go ahead.
Yeah, there is one I love to point to, not so much that it's so much different or better than any others, but it really was what I thought I might be able to get at. And that was the conversation I had with Scott Malpass, who's the recently retired Chief Investment Officer at Notre Dame University. And I had known Scott from when I worked at Yale, but I hadn't seen him in over a decade. And when we sat down, the conversation for me was, hey, how have you evolved investing over the last 10 years? And he walked through every aspect of what they had done in that office. And there was so much rich information about his investment process. And he's uniquely positioned because he had been in the seat for 30 years and really had just stellar results. But that wasn't so much, it wasn't my favorite or least favorite. It was just something that was really emblematic of the lessons that people can learn from listening to the show.
Well, I'm just thinking these words of wisdom, or nuggets of wisdom, I should say, would be a great series of T-shirts, because there's some really great ones there. Listen, good luck with the book, and really fun to have you join us. So thank you so much. Really appreciate it. Ted Seides, he's founder and managing partner of Capital Allocators. The book, Capital Allocators, How the World's Elite Money Managers Lead and Invest, just out. All right, coming up, Sound Down with Kevin Cirilli. What you got on tap, kiddo?
We've got some tough topics, but a great show. We're going to talk about gun control and the filibuster. Also, Treasury Secretary Yellen's testimony. And did you see this Netflix documentary called The Last Blockbuster?
Oh, gotta go.
San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Robinhood's path to IPO. The popular trading app is said to have filed confidentially, setting its sights on a NASDAQ listing. Despite regulatory scrutiny and lawsuits, you can expect a head-turning valuation. We'll break it all down in a Bloomberg scoop. Plus, aggressive and destructive cyber attacks against companies and governments on the rise. Why haven't U.S. cyber forces stopped them? What's really at stake? We'll speak to the head of IronNet Cybersecurity and former director of the NSA, General Keith Alexander. And Amazon anoints a new head of its cloud unit, company veteran Adam Silipsky, to take the reins. We'll tell you all about him. All those stories in a moment, but first to the markets and some big breaking news about Intel. Our Ed Ludlow and Kriti Gupta standing by. Ed, I'll start with you. New Intel CEO Pat Gelsinger embarking on an ambitious plan for reinvention. What can you tell us?
Yeah, redheads crossing the Bloomberg terminal. Intel is going to spend $20 billion on 2 new factories in Chandler, Arizona, adjacent to its existing facility there. It's also going to launch a new arm, a foundry business that will build semiconductors for other companies. That puts it, of course, in direct competition with TSMC, which is widely regarded as the world's best third-party manufacturer of semiconductors. It's really interesting. It's an opposite strategy to what Wall Street was looking at. They thought that Intel might outsource more chip production and scale back its historic business of building chips in-house. Not to be, the complete opposite. It's doubling down, investing heavily. And what's interesting is Gelsinger is talking about actually expanding that manufacturing internationally down the road. We could see more US factories, more factories in Europe. Let's get to some of the after-hours action and movers, because the stock is moving on this headline. Intel currently up around 1.3% in after-hours trading on Tuesday. Interesting as well to look at TSMC and some movement in that stock. It will have profound impact on the supply chain, because very few of the names we know in the semiconductor space, the likes of Qualcomm, AMD, for example, make their own chips. They outsource to a third party. You can see that after-hours action there. That's the Taiwan Semiconductor ADRs, American Depository Receipts. You can see the stock down 1.7% in after hours. So clearly the market's paying attention to this.
Intel in this move, Ed, shirking pressure to outsource its chips and then instead doubling down with his $20 billion on 2 new chip plants in Arizona. Gelsinger saying they've got more planned in the U.S. and in Europe. What does this mean for the chip shortage that we've been talking about so much and has really plagued the supply chain?
Yeah, it's really that reliance that I was talking about. A lot of the names that we come across in the chip sector rely on Taiwan's TSMC and Samsung to actually manufacture the chips for them. So when President Biden and the White House made that executive order to fix the supply chain, a lot of the focus was on bringing domestic production back to the United States, increasing production capacity. If you read across Wall Street, the issue for the global economy, the concern was that it takes a lot of time and a lot of dollars of investment to make that happen, to build new factories, to increase installed capacity. Well, if you look at Intel's plan, that's exactly what they're doing. $20 billion to start, but as I said, Gelsinger hinting that this could be a global expansion with more factories coming down the line in Europe as well as the United States. That direct competition with TSMC. TSMC is already building chips, manufacturing chips for some of Intel's clients. So there's that sort of competitive angle that puts them on a direct collision course. I think analysts are going to be paying really close attention to this over the coming days. Kriti Gupta, though, what's going on in the broader markets?
Right. Kriti, break it down.
Absolutely. Well, you saw a lot of pain across the markets generally, but tech was no exception. What was actually the key outperformer here is going to be those big tech names. You can see on the chart right behind me, from top to bottom, from the NASDAQ 100 all the way to the S&P 500, even the semiconductors really taking a step back. It was those big tech names that fared well today. Once again, havens seemed to outperform. But I do want to show you the NASDAQ QQQ. If you hop into my terminal and look at the ETF that tracks the NASDAQ 100, you can actually see that it has most recently got its biggest inflow all the way back to the dot-com bubble. Now, some of that has to do with simply the opportunity around quadruple witching that we saw last Friday, this major idea that those liquidity windows, the ability to get a little bit of better margins in terms of buying in, really incentivize a lot of investors to hop right back into tech. And of course, this is crucial after we've seen quite a bit of tech pain coming off of those yield serves, that sensitivity extremely important. But I think after hours right now, the biggest story is going to be right after Intel is going to be GameStop, and that's that's really the aftermarket action I want to look. Of course, you're seeing those shares decline. You did see an initial jump when you started to hear comments about them missing estimates, but still actually bringing up a new emphasis on things like e-commerce, recruiting a Amazon and Google veteran, Jenna Owens, to lead their operations. Crucial, though, to remember, in the last 7 out of 8 earnings quarters, you did see GameStop actually decline after those results. So it looks like they're just following the pattern here, Emily.
All right, Kriti Gupta, Ed Ludlow, thank you so much for that roundup. Just want to note, we're going to be speaking with Intel CEO Pat Gelsinger Wednesday. You do not want to miss this conversation as he lays out an ambitious plan to double down on in-house manufacturing of chips after Intel has lagged some of its biggest competitors like TSMC. We're going to talk more about that throughout the hour and speak with Pat directly tomorrow. All right, coming up, we'll dive deeper into Intel's plans for reinvention, what it means for the broader chip sector with Ivan Feinseth of Tigris. That reaction next. This is Bloomberg.